apologize for that. I was sending you DMs because I thought we were starting. I'm so sorry. Would you like to start the
No
intro
worries, no
again?
worries.
Okay.
No, we can just clip it. No worries. All right, let's just get going. All right, welcome back, traders, to another episode of Market SkyCast, your official Blue Sky podcast. Now, I think we have more to talk about every episode. Just when I think things are settling down, they're not. So we're gonna bring in the coaches, the Blue Sky coaches, Coach Becky, Coach Riz, and Coach Matt, because we have a ton to talk about this week. Over the weekend, we have issues with shipping, with oil, peace talks, more and more, and we even have earnings getting in here. So let's just hop right into it. Now, if you're a futures trader, you already see what's going on just with Sunday night's price action and Monday's price action. But Coach Riz, what did you see over the weekend or even today that really has you thinking as a trader, what you're going to do, and just anything to do with anything going on? Because there's so much. I want you to just pick one thing and go off on it.
The weekend was really interesting. I spent the majority of the weekend going through the news and the macros, trying to figure out what is the direction that crude oil is going to do to the market overall. Inflation fears, rising cost and energy. I did hear some information. China's applying pressure now to the US and Iran to reach an agreement. And I think that that's a good thing, but that can also be a bad thing because we know that China is already buying oil and is allowed to buy oil from Iran. But can the US manipulate China to buy oil from the US, or can we hold out long enough for Venezuela's oil to come online? Now, we do know that China and the EU have about 45 to about 50 days left to maintain what they've been doing, which is giving the market relief. They've opened up the reserves and they're offering relief not only to their own markets, but to the global markets to be able to benefit from currently the cheaper price at the pump. Now, don't let that deceive you because that is a finite band-aid that's not being replenished. And that has me on high alert right now because there are cheap out the money puts right now with crude oil. There could be something that could really turn into something if we don't find a negotiation. Now, we did hear that Trump did make some notes and statements that he's looking for 2 weeks that he'd like to have this closed out. And that puts us right in the middle of that because I think 2 weeks will be a do or die mark for the market overall.
Yeah, I like how you mentioned 45 to 50 days because that might seem like a lot. But once your country starts getting its back against the wall and people can't get to work, you can't do your shipping, Amazon can't do work, people start getting desperate and things might start happening sooner than later. So great points overall. And especially with the Venezuela, as they're back against the wall, getting us the oil on time, a lot to think about. And I like your thought about some cheap out the money puts. Never a bad idea for a lotto. So good points, Riz. Coach Becky, now you've been talking about technicals the last couple of weeks. Are you still mostly technical based just because there's so much noise out there that you're really just paying attention to the charts? Or is there anything that kind of popped out to you? Or are you kind of mixing both together?
I definitely mix them both together because for me, the headline news and everything that's going on is just so deeply concerning on so many levels. When you guys both mentioned back against the wall, I mean, if that puts a visual in your mind about the pressures that we're putting on major powers in the world, and then tensions coming together, and each country trying to do the best for their people, and there's just so much tension and uncertainty going on right now that it absolutely makes me on edge as well in terms of both the crude oil market, but then just the market in general, because there's so much volatility. For me, we really are seeing outsized moves. And so my strategy, my edge on trading is still working, but I am finding that it's the risk that I'm having to take is different. And the way that I, view the markets is different. And so I'm just having to try and calm myself down and remind myself to be more patient, size down, like really try to aim for only really the best setups, because the maybe setups are just having more losses lately, where maybe before they were a little more consistent. So I like to merge it all together. For me, that's what keeps me the most sane. I guess as a part of that is through the stress of what I'm worried about in terms of the humans involved, but then also, like, I want to still be an effective trader and control what I can control, which is my inner circle, my people, and the way that I execute when I'm doing my business. And so I'm definitely got eyes on and ears on everything and trying to just be super careful with the situation. Because as you see, even on that crude oil chart, Riz mentioned puts. There was a significant break in structure when the news last week that initially looked positive for negotiations fell through. This weekend was highly volatile in terms of pushback from all of the different countries. And so for me, nothing is settled, nothing is consistent right now. And that is showing on the chart. We're seeing big pushes up, and then we're seeing some pullback, like as in the futures market. Now the ES, I mean, we'll talk technicals, but there's just, I think I'm just on edge of merging it all together, and that's showing some mixed signals in both ways. So I would definitely urge caution.
You're on mute, Justin.
I love how you said sizing down, risk mitigation, all things like that. Because I actually was talking to you before this podcast, and turns out we were both short on a good break of structure setup. But one of these random, just massive green candles took us both out. And I was feeling bad. But if you were in the same play and I talked to somebody else who are in the same play, things happen. All you can do is take your setups and just, appropriate your risk responsibly. So great points overall. Now, Matt, you kind of want to put the technicals and what's going on together, because I know you got a lot going on up there, because you're looking for swing trades, you're looking for intraday trades, you're looking for everything, brother.
I got a couple thoughts. First and foremost, just thoughts and prayers to the Bears right now. You guys, edges have changed, environments have changed. You got all your data, you got all your technicals, you got all your fundamentals, you got your edges, and yet you just get slaughtered by a tweet. And just thoughts and prayers to the Bears out there. That's number one. Number two, Riz, I've heard the president talk about plans in 2 weeks more than one occasion. I believe his favorite timeline is 2 weeks. In fact, I'm still waiting 9 years later on infrastructure week that was supposed to be planned 2 weeks in the future. I'm also still waiting on a healthcare plan that was supposed to be 2 weeks in the future, and that was 10 years ago. By the way, it was 2 weeks ago that the president said in 2 weeks we'll have a deal. So I'm very used to the 2 week timeline there, and I'm right there with you, brother. No, and my third point is, as a technician, you got to recognize when patterns change. And when patterns change, the environment changes and the market sees it through a different lens. The market has simply accepted one truth, and whether that is a real truth is not the matter of the conversation. The market has accepted one truth, that the president of the United States wants to find a deal. That's what the market believes. And because the market believes that, whether it's 2 weeks, 2 days, 1 week, or a month, doesn't really matter. Once the market accepts the fact that the president of the United States wants to find a deal, the market's going to price in news differently. And that's been the case for the last 3 weeks. So when you're talking about patterns in the market changing, for the first month of the saga, the market was a very specific pattern. Monday morning pump, Tuesday doji, finished the end of the week at a lower level. That changed 3 weeks ago. And for the last 3 weeks, the futures have gapped down. For the last 3 weeks in a row, the futures on Sunday have gapped down. For 3 weeks in a row, there has been zero follow through to that gap down in the futures market. So every bear in the world over the weekend's like, end of the world on Monday, end of the world on Monday. We're getting doomsday on Monday. Everything's going down. The world is ending. We're going to get our edges. We get the gap down. Bears get excited, and yet zero follow through. That's because patterns have shifted, environment has shifted, and bears no longer have control of anything out there. And I am not judging, Becky. There might have been a comment or two to the perma bear, but I am not judging.
She's taking this personally.
So, and my last point is this: because the environment has changed, in my opinion, the most important conversation this week is not going to be on the geopolitical side of the equation. Whether or not this market wants to sniff that 7K level, whether the NASDAQ wants to break out, in my opinion, it's not on alleviation events, it's on earnings. Earnings takes the front driver's seat in the market this week. You got Goldman Sachs today. They came out already, but it really starts tomorrow with JP Morgan. And then we get into the fire of the NASDAQ and the AI trade with ASML on Wednesday, Taiwan Semiconductor on Thursday, Netflix on Thursday as well. Those three stocks represent so much growth to the market. From an AI perspective, that's going to be the most important data that's coming into the market this week.
It's funny you mentioned bears not in control. You know how many text messages I got last night? Because I've been a perma bull the last couple of weeks. Just everybody's saying I'm wrong. oh, we gap down and look, we're already
Be in the
past the
market
gap
20
and
years, they'll
and
teach you
we're
to be a
ripping.
perma bull all the time, Justin.
Yeah, 100%. And earnings with all this going on, I'm just excited to see as a trader what's going to happen. So that's great. Now we had a lot going on, but we do have economic data and we do have earnings come in like Matt's talking about. So it's not just the geopolitical climate. There is so much going on. So let's just go ahead and hop into our next segment called Market Watch, where we're going to look at the Forex data, earnings, and anything that might involve, how you need to tailor your style going into the week that doesn't have to do with the headlines or the tweets coming out. So, Becky, I want to start with you. Now, you're usually pretty into the economic data. From what I'm seeing, it looks like a pretty light week. So, what are you kind of looking at?
Yeah. Well, first I have to tell Matt, I think that your point is so good about flexibility. So for me, I'm like, yes, I do love a six short. I love it every day and I dream about it at night. But I also recognize when I need to trade with the direction. And so for me, like I definitely have had on my radar of like stay flexible, trade with the price action, like let it be. So like you have said, we had a consistent trend. We have shifted and now we have a new trend forming. We're having some consistency over the last 3 weeks with the way that we are coming into each week. And so for me, I did trade a few trades in different ways today, and all my longs were profitable. And the one short I tried was annihilated with the giant volatility upswing. So, to your point, well said. And stay
Am I hearing
flexible.
a transition here, Becky, from perma bear to perma bull? Am I? I
I'm
think I am.
a
I
day
think I
trader,
am.
and I'm going to capitalize on who's strongest. That's what I mean. Sometimes I do love a bear move, but I also love being I love being with the momentum. I love the moves that really get going and you get a really good entry and then you can ride it and take it. And so I do. I'm embracing my inner bull as well, and it was profitable today. So cheers to that.
Well, one time I was a perma bear and the market was breaking out, and my mentor Keith King says to me, "Matt, will you just shut up and plug your nose and buy something?"
You know what?
And
I don't want to be a perma bear or
taught
a
me a lesson.
perma bull. I just want to be right. I don't care. Give me a direction. Let me
Uh,
be right. Let me make some money.
Yeah,
The
I
right
mean,
side
at
of
the end of the day,
the
all four of us are technicians, and we're going to
Yeah.
trade the trend regardless of what we
Mhm.
think about it from a perma bull versus a perma bear. That's just more,
Mhm.
funny conversations more
Of
than
course,
absolutely
absolutely.
anything. I know Becky is one of the best cutthroat traders out there, and I've seen her take bull trades with the best of them in the last week,
Mhm.
2 weeks.
Mhm.
Riz is just a technician. He's just going to slaughter anything out there.
Yep.
Justin, you're a technician. We're all technicians at heart. How you
Honestly,
categorize
the only thing
yourself
is
is a different conversation. I'm a
Mhm.
perma bull with a tactician's bear heart is what I am.
that's the
Love
only
it.
traders that make it are the ones that are true technicians that embrace the game, embrace both sides of it, and want to like really take the best opportunity out there. Like we can tease and we have our tendencies, but the only traders that make it past year 1 and 2, honestly, are the ones that can be flexible with the market that what is being presented in front of us. So I think that
Mr.
is the
Market does not care about what your opinion is. I can tell you
Oh,
that.
absolutely not.
Mm-mm.
Yeah, trade the chart, not your heart. Great point, Coach Breezy. And I think
I love that.
adaptability is the name of the game. If you can't adapt, you're done in this game. There's no
Mhm.
winning. But now that we got over that, is there anything you're actually
All
looking
right.
at on the
Mhm.
on the data? I see one thing that you're probably going to talk about. The rest of it looks, pretty small.
Yeah, it's pretty much a no for me because there's PPI on Tuesday morning pre-market. And so that is on my radar. That will be when I wake up that morning. I want to see what the data presents. I'll check on see what the numbers did, and I'll look at the price action on what it trades. But that's not one that I have interest in actively being involved with. That's just something that I will factor into my trade plan on Tuesday morning. So for me, looking ahead at the Forex counter, always a part of my Sunday preparation for my week. And it looks like something that I don't have to worry about. So for me, it is the geopolitical and keeping my ears to the ground on any information from that source, and then also bearing in mind when the earnings will hit this week of the big names that we're watching. So Forex calendar is a light week this week.
Yeah, it is pretty light. And do you have anything on your mind for earnings? I know you trade the ES, so the bank earnings might be a little bit better for you compared to the tech earnings.
They are, but I think that you can't underping, under quote the importance of Netflix and Taiwan Semiconductors. Those are two that I have personally traded in terms of stocks, and so those are definitely on my radar. So this week is definitely something that I think that we'll see some action when those report, which is after market. So you have to bear that in mind if you're trying to hold any position overnight on during the earnings seasons when it's hot like this week and next week. I would definitely encourage you guys to pay close attention to that if you're considering holding any trades overnight. Is a big something that I don't know that everyone pays enough attention to, because normally if we're trying to catch a little move overnight, you don't have to worry as much. But when there are earnings announcing from big companies after market, is a huge factor to be aware of.
Yeah, absolutely. And now, Coach Riz, as an NQ trader, I'm sure there's a couple things you're looking at going into the week. You want to kind of explain what you're looking for?
Right now with the geopolitical situation, that's been the biggest thing I've been keeping my eye on. We've got an inflation read coming out Tuesday at 8. So, that might just be something for us to keep an eye on as well. We've got Q1 earnings season kicking off as well. So, we got Goldman Sachs coming in. That came in this morning. We've got JP Morgan, we've got Wells Fargo, Citi coming up. Banking sector as a whole coming up this week. So, what is the banking sector is going to be doing? How are they positioning themselves, especially in these current events? We know that these institutions are going to want to over leverage themselves because we know margin calls are out there because they just happened in the silver sector just a few weeks ago. So, those guys are still reeling off of that. And I don't think they're going to do that twice. So, I'm keeping an eye on that. I'd like to see the uptrend continue, though. Me in chat, never short America, brother.
Absolutely. Are you looking at Netflix at all, or is that later in the week? You'll worry about that later.
I think I'll worry about Netflix later in the week. Right now I'm just taking it level to level, day by day. I'm taking the morning levels, and I'm being grateful for the trend we've had because the morning session has just been pure gold. If viewers are catching Mike in the morning session, then they're getting pure gold because the mornings have been providing, and Mike has been there to navigate the waters with our community every morning.
It's funny that you mentioned that. I'm bringing to people into BluSky, as often as I can, friends that are traders or friends that are learning how to trade. And I had a buddy text me at 10 o'clock this morning, casual 20K for Mike this morning, LOL. And I get one of those almost every day because that man hits 20K almost every day like clockwork. And it's just fun to see in real time. And if you haven't joined the server, join the Discord, watched on the YouTube in the morning, and watched Coach Mike, oh my God, you are missing out. That is watching a tactician in real time with some big money. So that is always so much fun to watch. And Coach Matt, now kicking into earnings season, this is your bread and butter. What are we looking at?
Well, you got the kickstart to earnings this week. It's earnings season officially now. That starts tomorrow morning with JP Morgan. And I think the one thing about the first week in earnings season is we have a little bit of a different lineup this week. Usually we get a late start to earnings season and the banks come in on a Thursday, Friday, and it kind of kickstarts it. This week you get a lot. You get value stocks at the first, you get growth stocks at the back. It's kind of like a mullet haircut. You got the business in the front with the financial companies, and you got the party in the back of the week with the growth stocks. And so you got a big time week this week from an earnings perspective, and there's four major catalysts out there this week, and it's not, in my opinion, the PPI report. No shade on the PPI report. PPI report is important, but we did just get the CPI report last week. We got the PCE report last week as well, so it's kind of adding on to a conversation that's already ongoing from an inflationary perspective. And so I do think, the four major catalysts this week are: one, do we see some degree of nuclear deal with Iran? Conversations, the ceasefire was obviously ceasefire agreement was kind of stalled and ended over the weekend, but we haven't seen a rapid restarting of the hostilities. We're still seeing negotiations take place, and especially there was word out earlier today that Iran was thinking about maybe accepting some of the nuclear proposals out of the United States. The president had something to say about that later on this morning. So I definitely think the geopolitical side can certainly be a catalyst this week, especially if we do see continuation on that side of the equation. But to me, it's all about earnings. And when I'm looking at the three most important earnings reports this week, I'd say J.P. Morgan tomorrow. They kickstart the banks. They're everything when it comes to the banks. They're the major catalyst when it comes to the banks. And when you're talking about the banks, we get a lot of them this week. And at the end of the day, in earnings season, it's not just about what the banks do, it's about the themes that get generated in week one of earnings season. And the banks have one job, and it's just to get on first base. That's it. You don't have to hit a home run, banks. You don't have to hit a double. You can literally duck your shoulder, take one in the shoulder, and walk to first base. I don't care. You just got to get on first base because you can't set a negative cloud in as we start earnings season. Don't come out, JP Morgan, don't come out tomorrow and say, oh my goodness, guys, we're lowering guidance. If that happens, how we will judge ASML on Wednesday, Taiwan Semiconductor on Netflix on Thursday is going to be through a different lens than what we are seeing today. So banks, just get on first, don't mess up the joint, and then let's see if we can hit some doubles and triples with ASML, Taiwan Semiconductor, and Netflix. So it's all about earnings this week for me, and I do believe earnings is the strength of the market. It's going to continue to be a strength of the market. We're starting out earnings season right now with 12.6% blended growth rate on the EPS side of the equation. Nobody's going to say 12.6% EPS growth year over year is a negative thing. Wait till we hit 18 by the end of the earnings season. You're going to say earnings season was fantastic. I'm telling you, I'm giving you future news today. Earnings season is going to be fantastic. We're starting out at 12.6% blended growth. Most likely we're going to get into 18. That's a good start. So let's see if we can get there, and it starts this week. The most important earnings this week, in my opinion, is Taiwan Semiconductor.
Has to be. Yeah. Has to be. And so you're basically saying this week is going to set the tone for the rest of earnings seasons, right? Basically, right?
No, what I'm saying is week one of earnings season always sets the tone for the how we view the future landscape of earnings. If JP Morgan comes out here and takes it on the chin and goes down and gives a negative warning on the guidance side of the equation, how we will view every other earnings is through that lens. And so it's a vitally important moment in how we see the Max 7 companies that are going to report in 2 to 3 weeks from now. And so the things that happen this week will influence how we react to the impact of the bigger earnings down the road.
Yeah, great point. And I do want to pick one, TSM, Taiwan Semiconductors. Last quarter, they knocked it out of the park. The earnings were insane. Do you think they can keep up that same momentum going into this earnings?
Yeah. They've done it for 3 consecutive years. I'm not going to be the person that says they're going to miss this time. So
There's always
no,
someone.
I'm a trend trader. Listen, I watched Major League back in the 80s. They told me 3's a streak. And so when you got 12, you got a streak going.
Yeah, 12 is more than 3, right?
Yeah. So it's not a matter of Taiwan Semiconductor beats. They're going to beat. It's a matter of how aggressive is their guidance. And if their guidance is fantastic, we're going to be talking about a multiple time frame breakout. You're going to be talking about upward moving in price in the NASDAQ. You're going to be talking about a spark on the AI trade side of the equation, which has not been a thing for 6 to 7 months. For 6 to 7 months, this market has been sideways neutral. You want to talk about things that can break the market out of sideways slumber? Earnings can.
That is a great point, because we have been going sideways, and this could really set it off and get us a nice trend. So what I'm hearing is we got geopolitics, earnings, and some macro data, like all hitting at once. So if I'm a day trader, I'm just hearing, don't be over leveraged, trade the chart, and trade within your system. Is that what you guys are saying?
Yep.
Yeah, that's I think you can give that advice every week.
Yeah, absolutely. Now that does it for Market Watch. Now we're going to go into a segment called Coach's Corner. Now, this is one of my favorite segments because it's questions from newer traders, some of them who are frustrated. Some might even be giving up. But we have professional coaches here to guide you through these moments in your trading journey. So let's just get right into it. Coach Matt, let's start with you. This is a good one because I've sized heavy in the past, I've sized small in the past, and the emotions change with your size. But this is a great one. Why do I get emotional even when I'm trading a smaller size?
Oh, it's such a fantastic question because our emotions are not just impacted based on money and profit loss and risk. In fact, I know a lot of traders, and I'm sure you guys do as well, that the concept of being right and not being wrong is as equally as important as the concept of making money versus losing money. For me, it's not about being right or wrong. That's never really impacted me. I get a lot of things wrong. I'm very open about those things. I get a lot of things right. I'm very comfortable with that. It's not a matter because I'm a deep analytical guy. It's not about being right or wrong. It's about going through the process. It's going through your steps. But you know, you take my brother for example, one of my trading partners, somebody I've been around for 20 years doing this business. To him, it's far more about being right. Like it is as equally about being right. In fact, he has created entire trading systems that allow him to be right 80 to 90% of the time. Because if he's not right 80 to 90% of the time, he is not doing very good mentally. Even if his accounts are growing, even if his average win loss 2.2 to 1, all of that, like if he's not right a vast majority of the time, he doesn't do well, which means he does a lot of naked puts and not a lot of day trading, quite frankly. So your emotions involved in trading is not just a matter of making money versus losing money, although that's a big one. There's other emotions that you have to learn how to control as well. And so when you think about those things that can stop you from getting emotional, obviously over position sizing is one of them. Taking on too much risk is certainly one of them. But this concept, and if we all have a moment of pure transparency and honesty, I think we all want to be right more than we're wrong, and that's an emotion as well.
Yeah.
And so, anytime we're emotional in any capacity, we usually are a worse trader, and that's stuff we have to learn how to control. But you're really getting into the mindset there. And what I would suggest is there's nobody better at mindset than Coach Becky. Coach Becky is absolutely one of the best I've ever been around when it comes to the psychology of traders. And she has just a wonderful webinar, trading lab every single Tuesday right after the market closes called the Psychology of Trading webinar. And I think I've attended every one of them, but one or two, Becky. And I just love it every Tuesday because I get to sit back and just soak up this amazing mindset that you need as a trader. And also, it helps me decompress, quite frankly, when you go through a long trading day and you have a moment to sit down and just kind of decompress with Coach Becky, talking about mindset and psychology and working on those things. And so, yeah, I could talk about that all day long, but get into Coach Becky's Psych Lab because it is amazing.
Absolutely. And you're right. I think traders are some of the most stubborn people ever. The dollar amount doesn't matter so much as being right for, especially when you're newer, you see all these other people being right all the time. Nobody ever tells you when they're wrong, but you're losing and you just want to be right every time, no matter what the dollar amount is. So I totally get that question. And I had that same question myself when I was a new trader. Now we're going to take a little break here. For those of you guys that have stuck around this long, I'm going to give you a little present. I got a flash sale for you. Use the code launch100 for $40 off your 100K launch plan. So that means you can get it for just $29 for a 100K launch plan, and that'll get you $3,500 worth of capital once you pass and get funded. That is an insane deal, absolutely insane deal. So again, launch 100 for $40 off your 100K launch plan. Get started for $29. This is what you get for sticking around and listening to us rant for a while. We'll give you these gems, we'll give you these presents, so make sure you stay around. Now, that was a great answer, Matt. Now, I want to get into you, Becky, because like Matt said, you are huge on the trading psychological side. And, there's a lot of people that have hard rules. There's a lot of people that have loose rules, depending on what the chart gives them. So this one, I'm really, really curious on your answer. And it might be, there's no one answer. But as a newer trader, how many trades per day is too many during the New York session?
Well, first of all, thank you, Matt, for your kind words. That was really very sweet. And so how many trades for a newer trader is good for the New York session? So I think that is, I think you do have to make your trading system speak to who you are and how you approach the markets. You know, you want to make sure that you're not too restrictive, because then it will feel like you're forcing yourself to do something that you don't want to do, and you'll break your rules. But if you're too liberal, then you're just going to have basically no structure at all. So finding that sweet spot is important. Now, I would say that the more trades you allow yourself, the more sloppy trades you're going to take, which is kind of a hard truth on that, right? So if you're saying I'm only going to take, you know, 2 or 3 trades and that's all the shots I'm going to shoot today, I want to make sure that I'm waiting for the pristine levels to have the best response possible, because I don't want to just throw my contracts around everywhere because no one cares and no one's standing over me watching me. I'm at home, I'm a retail trader, I'm at my mouse by myself. I don't have to tell anybody what I'm doing. I can just reset. But if you're allowing yourself that freedom is dangerous. And so I would definitely say, for me, I choose to trade a hard stop no more than 5. And usually I will separate those out in different accounts at different times. And I will try to trade one account no more than once or twice, because I want to really prioritize A+ setups to the best of my ability. And so that encourages me personally to be my most patient trader. And when I am patient and I let my level set up and I wait to see the confirmations that I need to see at my levels, I make the best trades possible. And so I do think that 2 to 5 is a good limit for early traders. And I think you want to really encourage focusing on your system versus the P&L and trying to nail in your entry and exits and aim for the best trades possible instead of raking in the money, because seeking to push your P&L will have you scalping for peanuts instead of dialing in a really strong process with your best trades possible.
That's a great answer. And I don't think there's a hard answer, because you said 2 to 5. I mean, there's wiggle room. Now, I do have a question. Say hypothetically in this situation, the trader is doing 5 trades a day. If they lose X amount of trades, should they stop, or should they go for all the 5 trades and try to make it back? What are your thoughts on that?
I do believe that you should have a daily loss limit, because I think that
Mhm.
that's really protective for me. And I think for almost all of my trading friends that I've really had honest, open, personal conversations with, accepting red trades starts to trigger a tilt cycle in almost every single trader, and especially in younger traders. Because when we want to be traders because we want to make money. And so when you're hunting that strong P&L, if you have a trade that is stopped out, you're going to feel some kind of defensive. And to what degree and how you manage that is individual, but it is going to be there for pretty much everyone until you get really advanced in your career. So when you know that each stop out is starting to trigger your emotions a little bit, starting to trigger your fight or flight, you're tempted to lose your focus and start to go on tilt, you need to have a safeguard in place. And that's what a daily loss limit is, whether it's a literal hard stop within your platform or just a rule that you really prioritize honoring. You don't have to trade 5. For me and for a lot of traders, 2 red trades is it, because that's sort of a cliff. That's sort of you putting yourself on the edge of a cliff, where if you're at 2, you could enter the F it mode super easily at 2 red trades,
Been
because
there,
the
done
third
that.
one would be like, right? I have done it. And to Matt's point about my psychology labs, like the reason why I feel like I do enjoy the conversations and I bring them about is because I have done this crap. Like I have put myself on that cliffside of having 2 full stop outs and just been like, well, we'll just see what happens today. And like, sizing up, and it usually bites me
Yep.
in the butt. So yeah, I would definitely say 2 losing trades back to back, or a certain number that fits for your account size and your capital that you're trading, should be a hard stop for the day. And don't push it till 5, because 5 red trades could be the end of that account or a significant hit to your personal capital, both of which are harder to recover. You want to put yourself in a place where you can come back the next day and have some mental capital and strength, and not have to be trying to dig out of a giant hole, but instead have it be a reasonable loss so it doesn't have as much emotional carryover. That's going to be your best setup for a whole future of trading, not just one day, one session.
And yeah, I love that dollar amount, maybe daily loss. But how many times, and let's be honest, have you hit that third losing trade and you go, well, I only have $500 left in the account. F it. Let's just go max size. Let's YOLO. And then, 9 times out of 10, it's gone and you're buying another account when you could have just stopped, survive another day, come back tomorrow, level headed, and maybe brought the account back into profit, or at least stayed alive for longer. So great points all around, as always, Becky. And last but not least, Riz, I'm really curious about this question for you, because you talk about this a lot in your live streams, and I know you work with AI and algos. So this question is about backtesting. Why does my strategy work in backtesting, but it falls apart when I trade it live?
That is a great question right there. The price action doesn't develop the same when you do back testing. That's the problem with it. A lot of traders will have difficulty with it's just like this. If you go into trading view and you pull strategies out and you adjust your candle patterns, you'll realize that there's a dozen strategies that tell you that if you use them, you're gonna be up like 110% with the strategy. But unfortunately, what traders don't realize is that the math inside of those pine scripts is that it's repainting as the candles are being drawn out in front of you. So those signals are actually developing after the fact. The lagging indicator really becomes the real Achilles heel to those. So that's where forward testing and live testing in the market is crucial. I don't believe in any of the back testing results. Everything I use is all forward tested and live tested in the session. That's where using a paper trading, sim trading is super important, because then you can actually substantiate that that is world price action and you taking the trade for yourself in the heat of the moment.
Yeah, I love that you said you got a live test, because I've seen so many strategies and people come out with an algo and they go, oh, I've back tested for 2 years and it's up this amount per week and this amount per this. And then, they sell it or they start using it. And then all of a sudden you don't hear from them because their algo failed or their strategy failed. I need to see 6 months, 3 to 6 months of results of live forward testing before I believe anything. And I do think back testing is great for practicing, but I don't think you can just, hey, I ran this and within 15 minutes I found out that this is the best strategy you've ever seen in the world and I made it on ChatGPT in 5 minutes. Those things will come and gone. So I love that you said forward testing. Um, so yeah, that's a great point. And what's the disconnect usually between like back testing and forward testing if it's not a lagging indicator? Is it just like execution, psychology, or like you said, maybe the strategy itself?
I think the biggest disconnect is time of usage of the indicator. If you're not giving the indicator enough time for you to understand how to work it, if you try to sim trade and understand an indicator in 2 to 3 days, that's not enough time. You need to Gantt 2 weeks of data to really understand it, because that gives you enough cycles of the market, news digestion, everything else, that you can really have a good understanding about it. So, it's just one of those things that you just can't rush the process. It takes time. But to be in this game, it takes time,
Yeah,
patience.
absolutely. Yeah, great patience. Patience is the name of the game for us traders. Now, before we get out of here, does anybody have anything they want to add that they forgot to mention that they're really just, had to tell everybody? I know we
One thing
talked
on
about a
that
lot.
backtesting, I feel like I've experienced that. Like I feel like the last fall, I remember I did like this really long backtesting session, and I felt so powerful coming into the market, and it actually really worked for a while. And then things started to shift, and I didn't catch it in time. And so I think that you should. I think backtesting is super powerful for like dialing it in and getting candles in your mind of what it looks like when the setup sets up and takes off. But I do think that the superpower of that is recognizing that that is old data and it could be replayed, but it could not work out. And so always like being that, like we talked about earlier about flexibility, how we saw that trend for weeks and then it pivoted. And you won't catch that if you're fixated on what worked last season. And so have that in your mind of that could be the situation again, but that super staying flexible and present with your price action. That's why I've said it so many times of like treat trading like a peak performance sport, because you want to show up every day like you have practiced your butt off for however long you've
Mhm.
been a trader, but you are wholly focused on the game in front of you, which is the current trading session, and you want to be ready to receive or pivot or adjust as the market data presents. And so that will make you a stronger trader back testing. But what really moves the ball forward is staying truly present when you are at your screen. And that just, the back testing has to be in the background and your focus has to be on what's right in front of you when you're in it.
Now,
Well,
those,
and
those are
let me just
words of
add,
wisdom right there. I'll tell you that.
yeah, let me just add something really quickly to that, because when you're back testing, you don't have the same emotions when you are live trading. And there's variables that when you're back testing that you don't know when you're live trading. And so
Mhm.
if you're back testing and your virtual experience is vastly different than your live experience, there is an emotional hookup there, and you should lower your position size and keep that position size extremely low until you have perfected your process. trading is a long-term game. I know we like to fixate on intraday charts, and so many times it's about the 1 minute time frame, the 2 minute time frame, the 5 minute time frame. But before you know it, a year has gone by and you're still doing the exact same thing because you did not take the time at first to really, really dial in your process, because there is a vast difference in backtesting and virtual trading versus live trading. In fact, the creator of Think or Swim, his name is Tom Snosnoff. He does not believe in backtesting. He does not believe in virtual trading. He doesn't think you can learn a stinking thing from that because you don't
With him.
learn about yourself. You
Mhm.
don't learn about controlling your own emotions. Now, I don't agree with that opinion. I believe in backtesting. I believe in virtual trading. I'm just saying there is a vast difference in the emotional output you go through when money's at risk versus when money's not at risk. So when you go live, if there's a disconnect, just make sure to lower your position size. Stay in this game for the next 10 to 20 years. Don't get chopped up in the next 1 to 2 weeks when you don't know what you're doing.
Absolutely. Great way to end the episode. And we are about out of time. But if you enjoyed this, go on YouTube, go on your favorite streaming platform, give us a share, give us a like, give us a comment, tell a trader friend. And if you enjoyed this, we do this all day long on YouTube and the Discord. And we do this live for exactly the reasons that all these traders need to do it. Because you're not trading alone and figuring out alone with professional coaches. So if you want to see this done in real time, risk management, execution, all the things you need to do to succeed, come and join the BluSky Discord and learn with us. Other than that, stay profitable. So until I see you next time, guys.